What investors want is the gold standard. We need to vet these guys. We need to understand, their track record. Is it legitimate? Investors know that the things they're seeing have been verified. You need to think to yourself, like, here's what their plan is. Does this make sense?
Good day, everyone. This is Dr. David Phelps of the Freedom Founders Mastermind and the Dentist Freedom Blueprint podcast. Today, we're going to go down the rabbit hole a little bit on how you, as a potential real estate investor in alternatives, and more specifically as an accredited investor, which we will discuss here with my guest today, who is Mr. Lance Peterson. Lance, how are you, sir?
I'm doing great, David. Thanks for having me.
Lance, we came to know each other through our mutual connection with Matt Burke. Matt Burke, the CEO and founder of Fairway America. You've been a part of that group for some time, and through your work with Matt and Fairway, and working with, through Fairway, multiple real estate managers or sponsors that do developments and have funds and syndications and different kinds of assets. You found that if you're going to be accepting money potentially from investors who want a portal to invest in different classifications of real estate, those investors want some kind of not necessarily assurance that there's been some vetting. There's no guarantees, but assurance there's been some vetting, and like, who's doing the vetting? And you guys want the same thing because you're putting your money and other people's money with these sponsors, and many of them speak well, they look good, and I'm kind of speaking from the accredited investor side. You look at the wild west, it's like, well, it all sounds good out there. By the way, let me just give a little bit more of your background. I'm kind of ahead of myself a little bit, Lance, excuse me.
Okay.
But today you are the founder and managing partner of Verivest, an end-to-end real estate investment platform designed to bring transparency and trust to middle market investing. You're also a principal in Fairway America, a real estate private equity firm, as I mentioned, in Portland, Oregon. You were also the co-founder and CEO of Convergence Networks, where you pioneered the IT managed services provider business model. Convergence was one of the fastest growing companies in Oregon and is annually recognized by its employees as one of the best places to work. You currently live in Portland with your lovely bride of 19 years and 5 children. So that's where we are. So now backing into the conversation, Lance.
Yeah.
Working with Fairway, with your background and knowledge, what were the issues that you with Fairway were always trying to deal with, and how did Verivest arise as a platform today to deal with some of those concerns and challenges?
Sure. Yeah. Happy to get into it. I think, to go back sort of in 2012, Matt Burke and I, we sort of pivoted our company, Fairway America. We were, historically commercial hard money lender in the Pacific Northwest. We found it more and more difficult to sort of find deals we were, willing to do, just that the LTVs that we wanted. And we realized that, we kind of wanted to move up a click and be equity investors and really become more of a private equity real estate firm, and allocate, raise capital from, investors, predominantly high net worth, and allocate it into, worthy sponsors around the country executing strategies that we felt were, going to deliver sort of an outsized risk adjusted return. So that was kind of the working model, right? And what came out of that, right, was that we learned quickly when we tilted up our first discretionary vehicle fund, right, to allocate into these things, is that the underlying reporting of the sponsors was becoming a hindrance. I mean, we couldn't report at our fund level, with the quality of the reporting that we were getting, right? So we realized there's this reporting problem. So an accidental business was formed out of that, in that we realized that, we had this advisory practice where we're helping people form pooled investment vehicles. And then we had our own investing activity. And it became very clear that in all cases, the thing that was kind of stopping, the capital formation and to fund deal flow was really this reporting problem, financial statements and capital account statements and all those sorts of things. So we took an internal department and made an external facing division, and we started offering that as a service, right? And so, here we were now, all of a sudden we kind of freed up that constraint. And in 2017, we spun that out as a separate company, which is Verivest. So we're really a service provider to this middle market real estate space, whether you're, because there's an ecosystem. There's guys who lend money to developers who develop, there's guys who, reposition and value add, and, it's all sort of interconnected. Well, as investors ourselves, what we realize is that when we find a sponsor that we think, has an interesting story, and it sort of fits our mandate, right? That, but we felt like, well, we need to vet these guys, right? So we need to start with them, and we need to dig deep and figure out if they got any skeletons in their closet. We need to understand, their track record. Is it legitimate? And, and then not to mention, if they've got a deal, sort of go down and dig into the deal level and figure out if it's a deal that makes sense for us to do, whether it's a fund or a single asset syndication or joint venture. But what we realized was that the time involved with doing that was great. And so we, like any investor, right? I mean, at that point, we're just sort of like a super investor, right? We've got more money to allocate, and maybe more resources, of course, to conduct that diligence on the sponsors. But what you realize is that you're saying no to potential investment opportunities because you don't have the time, right? And so this is where I think it's for all those who are looking to invest passively, sort of have that, it's that moment of time where you're like, I know I need to do more. I should be doing more digging, other than, and when you talk to most people, what they say is they use time as sort of their barometer. I'm going to meet someone today, and I'm going to wait 6 months, 9 months, a year before I decide to allocate to them. Right. So to us, we saw that we didn't have that time. We wanted to allocate capital. We had money. We wanted to put it to work. So we had to solve it, which meant that we had to increase our, resources and those things. And of course, trying to get someone that you don't even know if you're going to invest in them to pay you money to do it upfront doesn't really work. And so I think when you fast forward, we saw that that's where there's a lot of friction. And so what I call it is it's the time to trust, because that's really what's happening. The transaction isn't, it's how long does it take me to decide that I trust you?
Exactly.
Now, most investors end up getting not all the way there, and they just have to use their gut, and they use this time thing to say, okay, well, I'm comfortable. But what I heard from investors, like mainly passive investors, those who don't have the kind of buying power that we might have at Fairway America, as an example, is that over and over and over again, they would share that, what I really wish I could run a background check on some of these guys that I'm doing deals with, right? Because they seem great and they look great and they're nice guys and we get along. And we have, we play golf, whatever the thing is. And then they also say, but you know what? I'm also secretly terrified is that I've invested in a Ponzi scheme.
Right.
So when it's going well and they're getting checks, instead of being so happy that they got this money, they're left sort of with this like, man, I just hope that this thing isn't just some Ponzi scheme, because for them, it puts them in this vulnerable position, which I think also is the reason why not as many people participate in this space, is that it's so intimidating, right? And it puts you in this position as a passive investor where you kind of end up feeling dumb, right? You feel like you don't know. And real estate guys, I call them deal junkies. They just love deals, right? And so, but they speak this language and this lingo, and it's intimidating. Right. And they're not even aware that they're doing it. And so then when you combine that with the fact that, they're all under the regulatory, they don't meet that sort of SEC requirement. So it is what you refer to as the Wild Wild West, right? There's really no oversight per se. And even the stuff that does exist, like audited financials or whatever, they generally are not, they're just trying to make sure the financials adhere to sort of GAAP or IFRS or whatever, not necessarily trying to dig up some fraud. So anyway, you've got these investors who these are the concerns that are on their mind. And I kept getting that feedback, and I take, the challenge we had with like, how do we just get in deeper down the funnel with these guys? And, and it dawned on me, all of our clients on our side, their biggest constraint was raising capital, right? So that they're like, number one constraint, just don't have enough capital to fund my deal flow. Right. And I just, building relationships. And that's when it dawned on me, is that it's like, you can't remove the fact that it's a relationship that's formed and the transaction is trust. So if we can, from where we stand, is sort of this independent third party, I call Switzerland in the ecosystem, which we are, short of the conflict that we have with Fairway that I have. So I manage that conflict, right? But I'm like, Verivest needs to be neutral. And I'm not going to say that's a good deal or that's a bad deal. Because the second that I do that, now I have to curate down to the deal flow. So my thought was, look what Amazon did and these sorts of guys. Like, what we really need is we need one place that people can go where all the sponsors are listed, right? And you can filter them by your own mandate, right? I'm looking for multifamily syndicators in the Sun Belt, right? And you can drill down and go, here's the universe. And then, my thought was that if I could have these sponsors pay for us to run the background check on them up front, and do so annually, and then sign a code of conduct that says, if I get into trouble in between those 2 points, I'm going to notify you. And if I don't, I'll be delisted, right? Like you kind of been removed from the network. That should help sort of, shortcut that. And then these track records that many of them, especially, they all say, everyone wants to make claims. I've done $500 million worth of loans. I've bought, $500 million, $1 billion worth of real estate. So my take in the world we live in today, right, is that, you turn on the news and you take any information, like none of us trust anything anymore. Like we just don't. I mean, I remember when I was younger, maybe it's because I was a kid, but I mean, I turn on CNN, I just believe what they said. and maybe that was just me in my youth, but I'd like to believe that they were more, or, at least Dan Rather at 5:30 on the CBS Evening News was telling me the damn truth.
Let me give you a tip. You have to go back before Dan. It was Walter Cronkite.
Walter Cronkite, right? Like a trustworthy guy. Like I'm getting it straight, right? So
right.
I think for me, that was the whole thing. It's like, if everyone's making claims, if someone could stand in there and validate and verify them, we can allow those who are upstanding people who are willing to be transparent and give them a platform to be discovered, right? Shortcut that time to trust. And then the other thing, I was like, put a video on there. Because once again, like you want to call people and you're gonna ask the same questions over and over and over again. It's just a waste of time. Right. So hit play, listen to 15 minutes where we ask them the same 7 questions you're going to ask them to go like, do I like these guys or not? Does this make sense for me? Right. And so now we're getting people deeper in the funnel, closer to making investments. And I think just removing some of that friction. And then obviously, I think a lot of new participants make it easier for them to sort of participate. And then fundamentally, it comes down to, once you've gone through the sponsor level due diligence and you feel comfortable with them because you know that someone's paying attention on an ongoing basis. And that was the other key, right? It's great that they weren't a criminal up to that day and didn't defraud people or be caught yet. But to me, it's what happens after the investment's made. And having been administrators now for the last 8 years, we just follow the money, right? You follow the money. And as the money moves out, mainly outbound money, where is it going? And there's this operating agreement that the limited partners and the general partner have agreed to. Like you can do this and you can't do that. And you have power to do this and you have the power to do that. You're going to get a fee of X based upon this, right? So to me, it's like, watch the money going out. So we collect bank statements. We get the general ledger detail that shows everything that was entered into the ledger against what the money that went out, the financial statements. If they say they acquired a new asset within that period, show me a closing statement. We'll review that against the public record and triangulate all these things. I'm going to make sure that wherever that money went, it was supposed to go there and it's for the amounts it should have went. Because and if we do that for all the investors that are invested, now they can focus on some of the other issues, like how's the business plan going? Is occupancy trending up? Are we, is the absorption rate going well? Because let's face it, like those are the things that I think everybody would rather be spending their time on. Yes. But the other stuff's a distraction. So that's really what we're doing. It's kind of like it's like anti-Ponzi scheme insurance, right? Like for us, if someone decides to do that, the fee is negligible. I mean, it's 3 basis points of the capital or whatever. And then investors know that the things they're seeing have been verified. When they say that these guys are managing $100 million, well, we know down to the penny how much money's been put into their stuff. It's not 2x that because they're just fluffing it up to, posture. That stuff is rampant. And to be honest, I'm just tired of it. I'm just flat out tired of it.
So just in review, Lance, and that was a great summary. Thank you very much. In review then, for a deal sponsor to be Verivest verified, then there's 2 components. There's the initial background check and track record, but then there's the ongoing monitoring. Now, is it 2 separate parts, or is everybody who's a part of that, is it all together in one thing? They can't just get verified and be part of that, or do they have to have the monitoring for ongoing deals? How does that work?
Yeah, great question. So when we consider a sponsor Verivest verified, that's kind of the lowest bar. And that's basically the principals of the firm have passed a background check. So they don't have any personal or business bankruptcies in the last 7 years, no lawsuits alleging fraud, no regulatory sanctions. The SEC hasn't barred them from selling securities, no felony criminal convictions, and they've signed the code of conduct. The decision of whether they pay us to verify their historical track record is up to them. Sure. So this is sort of like, I'm a big free market guy, right? Like if your competitor, at the end of the day, you're all competing for dollars, right? Has decided to take their historical track record and have us verify it and make it publicly accessible for investors to see the depth and breadth of said track record, then you're sort of at a disadvantage if you're trying to sell the same thing, right? If you're both multifamily syndicators in Charlotte, North Carolina, most investors are probably going to go with the one who's decided to actually have their track record validated rather than just provide them
Sure.
a PDF. So that's their decision. But, step one is that we won't verify the track record if someone doesn't pass the background check, right? And then the monitoring is separate. So we go down to, you've got X number of investment vehicles that have been spawned that have so much investor capital at risk in those deals, right? And so it's more of a, if you've engaged Verivest to monitor 100% of those vehicles, then you attain this new status. In our system, it's basically a gold badge. And now in the search order rankings, all of the gold badge people in order of investor capital managed, high to low, you're going to rank higher. So you're going to be discovered more quickly. And if, let's say that you've only engaged us to monitor 2 of your deals, but the other 10, we don't see, then you'll get a percentage of, 20%, of your deals. So what we're trying to do is we're trying to really we realize that a lot of this stuff under the hood, there's a lot of data, a lot of information, and it's a process, because for many of them, it's not a matter of like, they've made some conscious decision that they don't want to be transparent. It's really more of a function of the organizational maturation, right? Like their ability to, when you think about it, even get to a point where they're able to provide quarterly financials, right? I know it sounds ridiculous, but there's a reason why many of the single asset syndications you've invested in, only give you a K1, right? And it's because what happens is that the property manager is producing something that looks like a monthly financial, but more often than not, it's missing a few things. It's not finished, right? And so that to close that gap for many operators, they don't have the resources to sort of like take what the property manager came up with and sort of finalize it. So for us, that's sort of our way of saying like, hey, you might not be there yet, but let us help you get to the point where you can consistently report to your investors financial data on a quarterly basis with some kind of narrative and get you in the bounds of what investors expect. Because what investors want is, if it's K1, then give it to me sometime in March. I don't want it in June, right? And it's like, I want a capital account statement on a quarterly basis so I can see like, what's my tax liability and where's my capital account? I want to see the property level or the financials for the deal that I'm invested in, right? I want a narrative report, maybe do like a conference call so that I can ask questions. That's sort of the gold standard, but it's so many people are away from it. So for us, that's really what it's about, is transforming and creating a forcing function for the market participants to start to make this look and the experience to be more similar for investors getting involved, instead of, because right now a lot of guys run around and like one of their big differentiators is we report quarterly. Like that's their differentiator. We've got an investor portal. I'm thinking that's not a freaking differentiator. That's a table stake.
Right.
Like, you know what I mean? Like you let your investors, limited partners have access to information about the equity investment they made. Like that should be required, not optional, because that's what creates this fear. And like, people are like, man, I hope everything's going okay. That's just not a good user experience.
That's right. That's right. You said this already, but I want to just reiterate this point, that with the background check, track record, and then the ongoing monitoring, you are in no way establishing the merits of a specific deal. In other words, you said good deal, bad deal. That's more. That's another conversation. You said really is where an investor needs to learn additional questions to ask, do additional due diligence, market analysis, other metrics they might look at to determine for themselves whether this is a good deal or not. Correct?
Yeah, most definitely. Yeah, that's I think that's like, it's like any investing, whether it's in the public markets, and you're deciding to buy a stock or not. A lot of people, of course, lean on investment advisors and those who sort of point them, right? So to me, that's what's happening, right? Is that they're sort of saying, I think that this is the appropriate investment for you, right? So you either decide to engage a professional to provide you that advice, right? Or you decide to, do it on your own, right? It's DIY investing. And if you want to do that, then you're going to need to learn how to do it, which is why I've got my own podcast called Real Estate Risk Report. And that's what we spend the time talking about. So I'm like, in my, my day job is sort of, Switzerland in the ecosystem. My side gig is sort of, trying to help people understand how to become better real estate investors. How do you dig in and what are these risk factors? And, how do you assess whether something's good or not. Now, as you know, David, I mean, there are market participants, and this is what I believe is this sort of middle market real estate ecosystem matures, is that what's happening is you're starting to see, a group of people, it's private equity real estate is ultimately what it is, but it's sort of like micro, right? Where there's these people like a Mike Zlotnick, or, even us on the Fairway America side, where they're really, really good at determining whether or not an investment is worth doing. And so it creates this really good tension. That's why we've intentionally not wanted to step into that spot, because what that's called every crowdfunding site out there. That's called CrowdStreet. That's called Realty Mogul. Because at the heart of it, that's what they're doing. The service they provide to their investors who invest through their doors is they're saying, we've taken it down another notch and passed judgment on the deal that it meets the merits at the deal level with our experts. But to me, this isn't an industry where there can just be five groups that control all the deal flow. Like real estate, and if it's not happening in private equity, or it's not happening in these other, venture, it's certainly not going to happen in real estate. Real estate is fragmented, and the fragmentation is a feature, right? And that means that, there's so many deals that are going on, and to have sort of people on the other side of the table from the operators themselves that are basically pushing back against their assumptions, enforcing that rigor, that's good for the industry. And then that allows those who are truly passive, who'd rather, play golf and not learn how to become, the world's greatest at analyzing real estate deals. That's sort of what's going to happen. And that is what's happening. So the doors and the access to product, I'm not here to say like I'm fully democratizing real estate. That's not my intention. My intention is to allow it to function more efficiently. And my belief is that means that operators, it's hard to go find deals worth doing, and it's hard to execute business plans on deals. And because it's local, that's enough work on its own. Having to build, 500 net new relationships with individuals to get them to invest when they need them to invest money is just a bit of like overkill. What's better served is for those to develop their own little tribes or followings who believe in their, the way that they assess and, look at deals and say, I trust that guy's ability to like, scrub down at the deal level and figure out if this is a good deal or not. And I think that just creates more healthy tension throughout the whole ecosystem. That's my opinion. And that's what I'm trying to further.
Yeah, really, really well said. All right. I'm not going to push you too hard on this, because this is not the point of our conversation today, but we both know that in long bull run market cycles, like we've had coming out of 2008 recession, last 8 years, we've even had a dip with COVID back in the early spring of 2020. We won't get into the reasons why things got pushed back up again, but there's a lot of artificiality to that. Why would you say to me or anybody else who is more on the outside, more of that passive investor, love real estate? There's this. Well, my point is, Lance, there's a lot of market euphoria out there.
Yeah.
You would agree. You would agree. And so is this a time when it's more important than ever, when we're at this kind of some height in the market where there's got to be, an asymmetric risk out there today of really knowing where you're putting your money today? Because again, we're talking about, for the most part, operators who have some good track records, but how far back do they go? What's their knowledge base? What have they gone through, and what's the foundational aspects of their ongoing operations? So just maybe give me some context there.
Yeah, no, I completely concur. Right. And I think that it's that is the issue, right? Is that when you have the vast majority of the market participants were sort of born out of that extended bull run from 2009, 2010 through, into 2020, right up to the pandemic, right? It's that, yeah, I mean, everyone looked like they were a genius. And so I think that, now it's trickier, right? And so for many of them now to sort of navigate this new world. I mean, even this morning, right? And I think the Wall Street Journal was just talking about, because there's been a lot of like multifamily more than any, like in the last, since even post COVID here, right, has been sort of really, really, really hit hard, like with everyone hyping it up, like multifamily shelter, blah, 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 right? And, Wall Street Journal's coming out today, and, you got to take some of this stuff with a grain of salt, but they're like, okay, they're starting to feel the effects now. Landlords and operators are, it's not all, it's not all rosy, but once again, it's like all this stuff has to be taken with a grain of salt, because if you're talking about New York City or San Francisco or whatever, yeah, of course, like those dynamics are, not good for those who own properties there, especially if they bought them in, Q4 of 2019. Right. And so you're going to see that. But, I think that those who have been in the game more than one real estate cycle will tell you that, like, you know what, this is what happens all the time. If it's not, this time it happened to be a pandemic, but like, this is kind of how it goes all the time. And that's the reason why I think that, yes, background checks and monitoring and all that stuff, that to me, that just keeps them honest. That's the trust but verify thing, right? Like when you have to make a hard decision, now you can't go and decide to sweep it under the rug. You sort of have to address it. And I think that's good. But ultimately, those who are controlling these investments, the skill required to navigate these markets, especially ones that sort of that falling knife, which is sort of what we can expect, because that's how other markets have operated. It really does become important to, figure out what their strategy is and how they're doing it and the markets that they're operating in. And because you did see on that run up where it just seemed like a lot of people were sort of reaching further out of, like, there were basically armchair firms who were buying, properties in places they don't live and don't necessarily have, like, a lot of, investors who are not local to the market. Right. And so I think that for me, that's kind of how I look at it, is that this is just my personal opinion, but I just think that finding people who have their ear to the ground in a given market, and this is, once again, just makes it all the more important that they are true pure play operators. I mean, fundamentally, someone who's controlling that asset, like, wakes up in the morning, all they care about is finding good deals and executing business plan at the deal level. They're going to be the ones, I think, who have a much better chance of navigating this environment and still generating value. But yeah, you've got to be very, very, very careful about, when you're an investor, if you see anything these days that's saying they're going to generate on a value add play, light value add or whatever at some 19, 20, 22 IRRs, like, that's just fiction, right? Like, I don't care what freaking market you're in. It's just, you just have to be more careful, right? And that's why, for me, I look at it like a lot of the stuff people are worried about when they're assessing deals was sort of that noise. I'm trying to eliminate that noise on Verivest to create signal, because what you should be digging into is down at that level. And you need to think to yourself, like, here's what their plan is. Does this make sense? Yes. So, like, converting, residence inns or ramadas, that are just, to workforce housing, multifamily. Well, I like that. It sounds like a good strategy, because those assets are sort of like been stripped of everything. There's a shortage of housing, right? And now affordable housing, like, that strategy makes sense. Does it make sense in every city? No, but there's certain markets does make sense, right? And so it's just, I think that's how you have to kind of look at it.
Yeah, really, really good. Well, Lance, gosh, I appreciate your time. It's always fun to talk to you. You have so much experience, and as you said, it's a fun industry to be involved in. It's a fun place for people like me and people that are in our group to be able to invest. We get to do a lot of things vicariously, but we want to be sure that we're doing them vicariously through people who know what they're doing. That's the fun part. Real estate is fragmented, and that's where the opportunity is. It's not a nationwide marketplace by any means. Knowing what's happening on a peer-to-peer basis is the key, and having access points and people like you who have set up platforms and the opportunity for passive investors to gain a level of understanding and knowledge and metrics and some level of assurance of the people they may be dealing with is the key here. So appreciate your time, Lance Peterson.
No, more than happy to join you anytime, David.